The following program is made possible in part by the Dayton Bar Association.
Good evening and welcome to You and the Law. I'm Mike Monta, your producer and host for tonight's program. And as we approach April 15th, we are going to talk about taxes, income taxes, estate taxes, things like that. Joining me as a guest on the show is one of the foremost experts in our local area in this field, and it's Mr. Chris Cowan, who we'll talk to him in a little bit and find out about him and what's going to be the good news on the tax front this year. Before we get to our discussion, let me remind you that You and the Law is a monthly presentation produced here at the studios of the Dayton Access Television. DATV is on Channel 5 and is the public access channel of Time Warner here in Dayton. The program is also cablecast on tape delay north and south via the auspices of the Miami Valley Cable Council. Executive producer for today's program, he's probably sitting home in his easy chair watching the show, is former domestic relations judge Mike Brigner. We also stream live on DATV.org, www.datv.org, so we're live streaming. You can call in. And this is an audience participation. At some point, we will have a number on the screen for you to look at and call in if you have a question about taxes. You don't see it right now, but it's 223-5311. We are sponsored by the Dayton Bar Association. There it is. We are sponsored by the Dayton Bar Association, which has been in operation for the benefit of the Dayton Montgomery County attorney since 1883, longer than Chris and I have been practicing, maybe combined. And is the director of that is Mr. Bill Wheeler, who's doing a fine job and has been for a number of years. We'll talk a little bit about the services of the DBA as we go along tonight. But let's turn now to Chris Cowan and ask him to introduce himself a little more fully so we get the information correct and exact, and he'll tell you about his background and being a tax attorney. Chris, great to see you again.
Mike, thanks so much. It's great to be on the show again. It's been a number of years we've done this. What do you think? 13 or
Quite
more?
a while.
It's been a while. Mike, as you know, I'm a retooled CPA. I was in the public accounting business in the 70s, then went to Dayton Law School and got out in 81. And since 81, the primary focus of my practice has been estate planning, wills, trusts, probate, taxation that revolves around those transactions, and some small business work. So there's almost always a financial tax veneer on everything I do, and so taxes sort of keep popping up their head along the way.
Well, that's great. Well, I promised our viewers some good news, and nobody likes to pay taxes or even file taxes or even think about taxes. But along those lines, there's something good to know this year.
Mike, we have good news. On the Ohio estate tax, and I'm not talking income tax right now, I'm talking death tax, estate tax. Starting this year, we have phenomenal taxpayer relief. The Ohio death tax is, it's been declared dead. 1/1/13, we have no Ohio death tax for deaths, and this is key, deaths that occur after on or after 1/1/2013. So if somebody has died in 2012, which is obviously not that far away, if they're single And if there are states over 338,000 for 012 deaths, we're going to have a death tax for those folks, roughly 7% above 338,000. But if somebody has died this year, resident of Ohio, doesn't matter what their net estate may be, no Ohio death tax. So there are, I can't tell you how many millions of people that affect in Ohio, but that is a lot of folks who are not going to be subjected to basically a 7% sales tax on the transfer of their net estate to friends and relatives and such like that.
Now, I know you didn't legislate any of this yourself, but what was the impetus behind eliminating the tax?
This is Governor Kasich, and he campaigned on the repeal of the death tax. And studies have shown, Mike, that people who make some money earning it here in Ohio, there's obviously weather considerations for moving to Texas, moving to Florida, moving to states that have no death tax.
So we're keeping the folks here.
That's the theory. We've only been at this
2 years.
2 months.
Oh, well, 2 months now, but two years since the governor's been in.
Yeah, I understand, but as far as when the bill went into effect, we've been at it 60 days or so. So we don't know, but the theory is what's going to happen here is you may be on the fence if you retire, and you're thinking, well, gee whiz, maybe I'll go to Florida, but you know what? I don't have any death tax issue, and if you're thinking about moving to a state that maybe would have California, Colorado, other sort of retirement communities, you'd be moving to a state that might have a death tax. So the theory is those folks will stay in Ohio. They'll keep their wealth in Ohio. They'll keep doing things in Ohio, spending money in Ohio. And so the concept is it'll be an incentive for people to retain their homes in this state, permanent residents.
Now, some of the states around the country don't even have income tax. We're not one of those yet.
We're not there. We're not Texas yet. We're not Florida as far as the income tax piece. We're talking, this is death tax.
Right. But our income tax in Ohio is somewhat reasonable, isn't it?
I think we're in the middle. I mean, I know New York and California obviously are higher. Obviously, states like Texas and Florida have none. You know, there would be 40, 50 different flavors of income tax, you know, where the rates are. Highest rate in Ohio is approximately 7 or 8%.
Okay.
And that's gone down a little bit from last year also.
Anything else in Ohio that's
well,
good
we
for
should.
us?
Well, let's maybe just sort of follow the economic concept a little bit. There are some ramifications off this. Cities are scrambling. Oakwood, Kettering, cities in every city in Montgomery County gets a piece of that Ohio death tax based on where you live. If you live in Dayton, or whether you're in Kettering, or whether you're in Oakwood, there's a sharing of those dollars, the estate tax revenues that come off those deaths to, say, a Kettering and Oakwood. And so those municipalities are losing millions of dollars each year. And so there's going to be a pushback on that. Those revenues, either services are going to be reduced in cities, right? Or the cities have to find revenues from other sources, raising their own income tax, paying for services. The budgetary issues are out there to replace the money that's going to be lost from those deaths.
So what was the governor's solution on that? Certainly had to know that, devising the bill.
My understanding is the cities are supposed to sort that out.
Everybody's on their own?
Everybody's on their own. They're going to sort it out themselves.
Okay.
But yeah, so that's one sort of, you know, there's all these different ripples once you change something. Another thing is there is a consumer positive here for people who were having estates with this loss of the Ohio death tax. The regular consumer should save money in Ohio. If somebody's single and say a single person with 3 adult children and there's no special needs and we don't have to worry about spendthrift and people are all, let's say, responsible. A single person now can have transfer on death, joint survivorship, payable on death, naming of contingent beneficiaries on all bank checking, savings, financial accounts, deeds, cars. And so with a little bit of work, I think what we're going to see is a phenomenal cost saving in probate administration. Those dollars should be saved by the average consumer with just a little bit of education and understanding how their assets are being transferred.
Now, is this pre-deceased for spouses, or is this like between spouses, or?
Well, for spouses, I mean, a lot of times now what we'll see, and let me put one more concept on here. We got the Ohio death tax is gone.
Right.
The federal death tax, we still have a federal death tax, but now the exemption for each person, you, me, your wife, my wife, any person who's a citizen of the U.S., it's $5,120,000 per person.
Is that permanent now? I knew it changed $1 million every year, it seemed, for the last 10 years.
The bill says it's permanent.
Okay.
Until
it isn't.
Until they change it.
Right.
But 10 million, I mean, let's just say, let's leave off the 120,000 so we talk on a little easier numbers. You know, 5 million for you, 5 million for your wife, 5 and 5 is 10. That strips out a lot of people in southwestern Ohio that we don't have to worry about the federal death tax anymore. That's a big number. And so we have great relief on the Ohio death tax, and the bill that passed with the federal government that starts 1/1/13 also is phenomenal taxpayer relief. $10 million for a family.
Now,
that's a lot.
Yeah, it is. And an incentive to get to it, I guess. $1 short, right?
Yeah, I mean,
okay.
That's a lot of money.
Now, before the show, we were discussing some of this, and you indicated this might change the needs of the general consumers to what types of instruments they might need in planning their estate tax.
Mike, I think we're going to...
Or planning their estate.
Yeah.
Planning.
Yeah, with the taxes sort of taken off the shelf, if you will, or off the table, I think we're going to see a major simplification of estate plans. And I'm doing it right now. Clients are coming in, and clients, where you made a reference where the old federal exemption was 750, and then went to 1 million, and then 2, and we had some different numbers going back and forth. That was really impacting a lot of people, where we had tax shelter trusts and other sort of more sophisticated tax planning. For 95% of the people, that can be totally eliminated now. We can go to sweetheart special wills, mom to pop, pop to mom. We have 100% marital deduction. We got a $10 million exclusion. And we can have the surviving spouse just give the property to the children at death. And so I think we're going to see a whole other consumer area of savings, truthfully. We're going to see savings on the death tax. We're going to see savings in probate administration. And we're going to see savings with phenomenally cheaper and simpler and easier to understand. The documents will be very, very consumer friendly because the concepts are going to be clear. We can have husbands to wives, wives to husband, and the rest of the kids. And death taxes are going to be almost a non-issue, except in a very, very, very limited number of cases.
Still need a will?
Need a will? Sure. Yeah, a will can be done very, very efficiently and cheaply, and you're still going to need the directives in Ohio. Financial power of attorney, living will, and medical directive. But those 4 things, your will, financial power of attorney, living will, and medical directive, for 98% of the people, that should really take care of what they need.
Okay. We're going to take a very short break here. You are watching You and the Law on Channel 5 here. And the telephone number for this audience participation program, I don't see it anymore. I'd like you to put it up more. It's 223-5311. So if you were sitting, there it is. No, leave it on there. Come on. If you're sitting at home or watching this and you really wanted to ask our guest, who's an expert, I'm happy I know the questions to ask him. He knows so much about this. He'll be able to answer it. Anything you want to know, he can answer it. So. And I told you before, we're sponsored by the Dayton Bar Association, and let me tell you just a little bit about their services so you know why we're so happy to have them. doing it. If you don't have a lawyer, if you need a tax lawyer, Chris Cowan is a good one to have, but if you need something else, they have a lawyer referral service for assistance in locating a lawyer whose number is 222-6102. A notary service, notary public service in case you want to become a notary yourself. There's applications and testing. And we have a very important program called Wills for Heroes. And that's where volunteer members of our association create wills for emergency first responders, firefighters, police, EMTs. And this month, it is going to be from 10 to 2 o'clock over on 8 Brush Row in Xenia, Ohio. So if you fall into that category, you don't have a will, you, your wife, children, go on over there. If you don't remember this, call the Bar Association at 222-7902. As I told you before, the website, well, maybe I didn't tell you before. The website is www.daybar.org. So, our director is trying to tell me something. I don't know what it is yet. I think we have a phone call. Is that right? Okay. If you're on the line, we're interested to hear what you've got to say, so welcome, and you're on You and the Law right now. We may have a 7-second delay, I don't know. Or you can watch me for a while. Is there really a phone call? There we go.
Wow.
Okay, good evening. You're on You and the Law. It's not coming through. Yeah, okay. Well, in the old days when we had technical difficulties, there'd be a little screen with a guy with a wrench or something walking through and maybe plugging in something. We don't have that this time. We're going to talk more with Chris Cowan while we get that fixed. Pick up where we left off.
Well,
here.
let me tie in a couple consumer things if I could, Mike. When we were talking about the medical directive of the living will, we should let folks out there know that they can get those for free. They can go right on the State Bar website. I do not have the website, but if you type in on the internet, Ohio State Bar Association, there's links in there where you can download for free your living will and the medical directive. The State Bar tells you exactly how to fill them out, and so you don't even need to see an attorney if you want to get those two instruments done.
Now, regular power attorneys are a different animal these days, aren't they? Last March, they changed the whole thing around, which makes it a lot harder to do, it looks like. Yeah,
we actually have a statutory now power of attorney, and you know what? I haven't been on the website in a little bit. I believe that is going to be posted also with the living will and the medical directive, but I haven't checked lately. But we do have an Ohio financial power of attorney that is going to be made accessible to the public also at no charge. Okay. Those three things you'll be able to get.
Since you did bring that up, tell us why it may or may not be a good idea to involve an attorney in those services. You can do them yourself.
You can do them yourself.
What are the drawbacks? And of course, we know the positive thing, you just do them yourself and it doesn't cost you anything.
Do them yourself. I guess the major problem, Mike, would be if somebody had some questions about how the documents actually work. What you're really trying to avoid is really an Ohio guardianship. There could be some situations where maybe a guardianship would be better than the living will. Mm-hmm. So there is some planning about what the documents actually do. Then, you know, once you give somebody these agency relationships, there are some risks and perils. Obviously, you've had some problems with people handling somebody else's financial affairs. There's been all sorts of litigation and misdeeds done with those things. So there's some things to know about that. And also, when you see an attorney, this may sound a little trite, but the instruments get executed correctly, right? You get the instruments off the web and something happens and you don't sign them right, you think you've taken care of something that needs to be done, but it's not done. So there's some thinking and planning, but if somebody really feels confident and gets the documents signed and prepared correctly, they're there for the public for free.
Okay. And there could be recording instances also which you may not know about or may not know.
Right. There's some other, aspects to them.
Okay. Let's switch gears a little bit. And of course, you in the viewing public, you're watching You and the Law. We're at 223-5311 if you want to call in. We're waiting for that first. I think we actually had a call, but somehow. See now, I just saw the number there. Leave that number there. Whoever's in charge in the back. I'm just going to sit and look at it all night and see if it actually works that we can actually get somebody to call. I know there's people with tax questions. I had a bunch when you walked in.
Yeah.
So, okay. We were talking about tax scams, not on the show, but you and I earlier. And these are kind of dangerous for folks, aren't they? In fact, I was reading about one for the elderly. I don't know what elderly consists of anymore, but where these firms would call and get people to fill out a form with their driver's license and social security number on. That can't be a good idea.
No, that's not a good idea. Mike, every year the IRS publishes their top 10 or 12 tax scams or problems, and it's on the internet. You can go right to the IRS website and get it. I looked at it a couple days ago. Phishing. I actually have this problem at my office where in the internet somebody will put a request out to me that looks sort of official. I should have brought one in. It looks sort of like it's maybe from the IRS or U.S. Treasury or some sort of governmental agency, and they're asking information about me.
Yeah.
Those are almost 99% an attempt for somebody out there in the internet world to get a date of birth, to get a social security, to get some information about you where your identity will be taken from you, and next thing you know, somebody's filing a tax return in your name trying to get a refund and has stolen your identity. So identity theft and phishing are actually...
With a PH.
Yeah, exactly, not F-I-S-H,
Okay.
right?
Okay.
But that happens in my office constantly.
You don't respond, I
No,
assume.
well, I mean, it would be crazy, but
Yeah.
the volume of that is huge.
Let me cut you off here. Our floor director says we actually do have a phone call. And if you are there, caller, welcome to You and the Law, and tell us your question. It's not. I hear you. I hear. Okay, start over again. I heard you faintly talking, but we're kind of in an echo chamber here. But it's important we get your question. So go ahead.
Hello?
Hello. What's your question? Hello.
Maybe somebody should write it down, Mike, and then we can answer.
Well, that is a suggestion. If we're having technical difficulties, if I could impose on somebody.
Hello, this is Christine calling from Washington, D.C.
Oh, hi, Christine. Welcome to You and the Law. What is your question?
Hi, thanks for taking my call. I'm a big fan of the show.
Good. What's
my
your
question actually concerns, I'm glad you moved to income tax.
I'm really impressed. We have a caller from Washington, D.C.
I know.
That is really awesome.
well, that's what streaming live does. We've missed I'm sure that our caller is talking somewhere. Okay, our director says we may have lost it to a bad connection, but if we could impose on the folks in the back, I know they're working hard on our show, and we certainly appreciate that. If they get a question, could write it down maybe and bring it in, that'd be helpful.
I'd love to answer it or try to. How about that?
Or try to, especially,
Somebody
especially
from
from Washington.
DC.
Yeah.
Wow,
Might,
that's cool.
Right in the middle of things. So. Go ahead.
Identity theft is obviously a problem. This phishing is a huge problem. If I'm getting several of these a month, everybody that's on the internet must be getting some of this also. Anybody, Mike, who return preparer, who promises a refund, wants a cut of a refund, refuses to sign a tax return, all those would be sort of pretty serious badges of some mischief going on. And so that should be red flags for anybody dealing with that kind of a situation.
Well, doesn't the IRS put out information that the IRS never calls you unless they have an inquiry about a return or something? They don't call with information for you unless you solicit it.
You mean how the IRS would communicate back
right,
to
I mean,
a taxpayer?
some of the scams are you get something on the internet that says IRS at the top and you should do this or that.
My understanding is IRS would never communicate with the taxpayer by internet. That it's either going to be a letter or, unfortunately, somebody like comes to your office or comes to your home.
Unannounced.
Well, most likely the first visit would probably be unannounced.
Right.
They just show up at your house, show up at your office, and they would have identification and all the proper papers and all that sort of thing. And then oftentimes they want then to schedule an appointment at the federal building or attorney's office or something like that. But to get an email from the IRS, my understanding is it is not done.
Okay.
I've never seen it. It's either U.S. postage or face-to-face.
Now, is it your impression then that these things are identity theft type of scams more than anything else, or are there some where they're trying to extract money from an unsuspecting taxpayer or whatever?
Well, as far as the phishing and as far
Right.
as the identity, I think absolutely. I think it's the whole comfort level that you and me and everybody else in America is feeling more and more comfortable with doing things on the internet. And so somebody just gets a notice saying, hey, I'm from the IRS or U.S. Treasury or Justice Department, and we want some information about your tax return. I got to believe, I can't give you the number, but a fair percentage of 100 people are going to say, yeah, sure, no problem. Here's my Social Security number, and I hope my tax return's okay.
Right. Okay. Our floor director is telling us we have about half an hour left.
Okay.
Go ahead.
Anybody who would suggest something offshore, there is no legal way for a U.S. citizen to move assets, property, money, stocks, bonds, interest, dividends, rents, anything offshore, and then say, hey, I'm a U.S. citizen, and because it's in the Bahamas or Caymans or someplace, I do not have to pay tax on it. Totally false. The U.S. government has a worldwide net for U.S. citizens. It doesn't matter where that revenue is earned or derived or located. It comes back and is taxed to the U.S. So anybody who would say, come with me at the scheme and we're going to buy something in the Caymans, and because it's offshore, you don't have to pay any tax.
Okay.
That's a super duper red flag. And the government's become very aggressive on that because there's been a lot of problems with offshore transactions.
Who would stand to gain on that? Obviously, the taxpayer would lose because they'd be coming after them, but who would stand to gain anything out of that?
Promoters, people who would have something to sell.
Finding an account for you.
Yeah, or they would want to have a relationship with a banker or a trust officer or a stockbroker or somebody who would benefit or get a commission out of the transaction.
Okay. I understand there's also like false 1099 refund forms or something?
Yeah, there's all sorts of tricksters out there that'll have an amended W-2, an amended 1099, an amended statement that would look like you're entitled to some sort of deduction, interest deduction, real estate tax deductions. And so there's a whole industry out there where people are making, if you will, counterfeit documents that then you would file with your tax return, and it would be either more deductions or less income. Or some combination of those two.
You gotta come closer. Okay. Here's a caller's question. Federal payroll tax holiday was appealed on January 1st. What does it mean? What are the implications for taxpayers?
That's a really good question.
That is a good question.
That is a daggone question.
Did that come from Christine in Washington? We think so.
Well, this is a good question, because we should really talk about this.
Okay.
Because this is something that's probably affected, I don't know, 90-some% of people who are actually not retired and who are paying income taxes. And the transaction is basically this. A couple years ago, in order to stimulate the economy, get more dollars into people's pocket, to help, if you will, get past this recession we've been in since basically 08, 09, the federal government said this: if you're a W-2 or a self-employed person, your Social Security, Medicare tax, Social Security tax, is going to be reduced by 2%. So instead of 6.2, it went to 4.2.
So that's really good.
Well, everybody got basically a little pay raise, right? And if you're an employer and contributing, then you're also getting a 2% savings, because you're not matching the piece that was being withheld out of the employee's W-2. Okay, so everybody had a little holiday, if you will, and I think that's what the question is Christine has come up with. It's a daggone good question, because now what's happened is, starting 1/1 of 13, that 2% was picked back up by the government. So it's not 4.2 on the payroll tax now. It's bumped back up to where it was historically at 6.2. So everybody got a tax increase.
Okay.
Right? A 2% tax increase.
Yeah.
And if you're getting a W-2 at General Motors, Chrysler, if you're working at any place where you're working where you're an employee, bumper to bumper, coast to coast, your paycheck has gone down by 2% because of this increase on the payroll tax. And if you're an employer, then you're going to be matching that 2%. So the holiday's over, 1/1/13, and that was part of the Tax Act and the fiscal cliff compromise deal that brought in the $5 million that we've been sort of chatting about on the estate tax piece. This was another little component of that tax bill. So anybody who's working, your taxes have gone up.
Okay. Do you care to comment on what's going on? I mean, our Speaker of the House says the President got his tax increase. He says nobody's going to approve any more taxes. What is our tax situation right now? What was the supposed tax increase on January 1st, and how did that affect, supposedly on the ultra wealthy or something like that?
Well, we do have. Do you want to talk about the Obama health care taxes? Is that what?
Well, I mean, after the president got elected, we were going to be on a fiscal cliff because we didn't have enough revenue or something, and one faction, the GOP, said no new taxes at all, and the president said if you make more than $250,000, which I think got bumped up to 400 or 500,000, then you have a little increase in your taxes?
Well, there are some tax increases, and I don't have the chart right here, Mike, but higher level taxpayers at $400,000 and $450,000.
That's making that per year.
Exactly.
Right.
Their taxes have gone up. But the Bush tax cuts that were implemented many years ago, basically 95% of those have been reinstated and carried forward from 12 into 13.
Mm-hmm.
Now there's a whole veneer of $1 trillion worth of tax increases that are cobbled together for the Obama health care.
Mm-hmm.
I mean, we can start ticking and tracing through those if you want. There's a tax on passive income for people over approximately $200,000. There's a sales tax, about 3.8% on medical devices. Sales tax, whether the company's profitable or not. There is going to be a reduction of itemized deductions, where you can't take itemized deductions if you're over 10% as opposed to 7.5%. There's additional income tax on higher bracketed individuals. Those are all sort of the financing component of the Obama health care that's going to be raising approximately $1 trillion over 10 years on those tax increases. Now they're not all in 1 year. Yeah. It's the burden to get that piece of legislation paid for.
Let me stop you just for a second. We actually do have a phone call. Let's see how this works out. Good evening. You on the law. Welcome. And what is your question?
Going to have to write it again.
We may have to do that.
Hello?
Hello. Welcome. And what is your question? We're getting the hello part good.
Hello, are you there?
We're there. We're here. Are you there?
I'm here.
Start talking then. If someone in the back could tell the caller to just say, they apparently...
Well, this is Steve from Delaware, Ohio. Appreciate you taking my call.
Thank you. Go ahead.
I have a two-part question. I play music. I have a band. We have about 6 guys in the band. And when we go and do gigs, we'll play like weddings and sometimes play bars around Ohio. And sometimes we get paid in cash, and other times we get paid with check. So I'm wondering, when I get paid and I pay out the guys, how do I reflect that on my taxes? Do I pay taxes completely on the sum that we make, or do I only pay the sum that I take?
All right. That sounds like a good question.
This was
And
Steve?
the second part is, if we play out of state, how do I reflect that on my Ohio taxes?
Okay. Good questions, and Chris will tell you.
That's a good question. I'm assuming everybody heard the question, but just in case, the question is, we have Steve from Delaware, and he has a band, and he is generating revenue and paying musicians, and he wants to know how to properly report that.
Well, and also I think he said sometimes they get paid in
cash and sometimes check.
Which I guess could be reported better than cash.
Let's start with the check and the cash piece.
Okay.
It's all income, whether it's check or cash, or whether it's barter, or whether somebody gives you a car, they give you an instrument, or they give you a vacation. If you're performing music, or I'm practicing law, or Mike's practicing law, and I get compensation for those services, it's quid quo pro. So the cash and the checks and whatever other items are given to Steve for the band's performance, it's all taxable income. Now, the tricky part here is it sounds like Steve is getting all the dollars,
Right, they're paying the head guy.
They're paying the head guy. And so he's picking up all the dollars. And let's say they're all checks, so it's a little bit easier to kind of grasp. So he's getting X amount of dollars value in checks, and he's picking all that up. So if he's going to be reporting us an income tax return as a sole proprietor, and they're not incorporated, they're not a joint venture, they're not a corporation, and he is the guy, Steve the band guy, and he's going to pick all the income up. No problem. Then when he pays the drummer and the bass and the organ guy and the vocalist, he's going to give them a 1099 of whatever their compensation is, right? And so then he's going to take a deduction. So if he brings in, let's say, $100,000, and let's say he pays $30,000 to, let's just make it simple, 3 guys. 3 in 3 is 90, so he's got $10,000 of net, and then the 3 other fellows would have 30, 30, 30 of income on their own tax return.
Okay.
Right? So we'd have income and we'd have deductions. He'd report all of the value he got, and he'd take a deduction for the distributions he made to the other band members.
Now, this is ostensibly the person giving him a check would report that as expenses for their own business.
Yeah, I suppose, unless it's a charity type thing, or somebody just has a wedding, or somebody has a retirement, or just has a party.
Right.
Right. If I had a big party at my house and I hired Steve.
We're going to have one right after the show.
Yeah, and I gave him a check for $5,000. It's just a party. I mean, be personal. But if he went to maybe a convention where they hired him at the auto show, and it was a business transaction, the person who wrote the check would take a deduction. Sure. So some of it could be personal, some of it could be expense on the person who's paying Steve.
Okay.
But clearly everything he receives is reportable, no doubt about that. And clearly everything he distributes out to the band members would be deductible. So he would then have a profit or loss depending on how he did.
If they were all like, they just, for convenience, paid one person, whether Steve or one of the other guys, but they're all kind of like equal guys. Let's say that, and our caller didn't say that, and they're all getting 1/5 or
there you go.
$20 a night.
Yeah.
Whatever. Can they also do it that way?
Yeah. The other way would do it if they could all divide it up that night.
Right.
Right. Instead of Steve being sort of the hub.
Right.
The bass, the percussion guy.
Everybody gets their $50.
Everybody takes their $50 and they just go home and they just file their own Schedule C.
It's
up to them to
do
pay their
Okay.
own taxes on their own earnings.
And then you wouldn't necessarily need 1099s?
No, you wouldn't need it then.
Okay.
No, you wouldn't need it then. If all the jobs got brokered out
Right.
on the ratio they wanted to do it.
Yeah.
But it sounded to me like Steve was the band
The leader of the band.
Leader of the
Yes,
band, and he was
leader,
collecting
right.
and dispersing.
Right. Now, what about the cash things? And you know, you go into a restaurant. I guess the restaurants report the tips, and the waitresses pretty much have to say what they got. But does this all work out the same with a cash payout from the bar, or the wedding, or something? Suppose somebody didn't. They got $500 for doing a wedding, and they said, "Hey, we're $500 ahead."
Well, this is no mystery of life. I mean, we have an underground economy in
Right.
America, and IRS is battling that all the time. It may contribute to some of the budget deficits we have and some of the debt the government has,
Right.
because we're obviously not collecting all the tax and all the transactions.
Right.
But the IRS's position is fairly clear. I'm an attorney, I practice law, and
Right.
if somebody pays me in cash, I'm going to report those dollars just like if they'd give me a check. And so IRS has ways of tracing funds. Obviously, it's very difficult for somebody who is painting houses, doing tradesman jobs, anybody that has a cash transaction, a waitress or somebody working in a nightclub, very difficult to trace. However, IRS, if there's enough interest in that, instead of Steve maybe getting $1,000. If somebody pays him $100,000 in cash, well, now
That's something different.
now it's gotten a little more substantial.
Yeah.
But the legal answer is whatever the compensation is paid, in what form it's taxable.
Okay. Otherwise, it'd be a gift, wouldn't it?
It would be a gift. Now, gifts are possible. You can make gifts to your children, gifts to friends, gifts to neighbors, and they're totally tax exempt. This year it's $14,000, so I can give anybody I want $14,000 per year. Mike, it's income tax, gift tax, estate tax, reporting free for me, the giver, and for the person who is the recipient.
Right.
Now, if you give more, we have a gift tax law that's wed to what we were talking to before, the death tax exclusion. They're unified. So if I was really in a good mood today, Mike, I could give you $14,000, and I could give you my entire annual exclusion, $5,120,000.
And I would appreciate
And
it.
you would appreciate
Yes.
it, and all I have to do is file a gift tax return, and it's totally exempt,
Right. Let me stop here.
which
just
will be a big gift for me.
Yeah, I'm assuming. Let's stop just for a second. I don't know if Steve is still on the line or he hung up. We appreciate his call also, as well as the earlier one from Christine. We've got about 10 minutes to go in the program. I do want to move. You're watching the You and the Law, by the way. In case you do have a question, we do have time for it. It's 223-5311, and we are in the 937 area. There you go. It's on the screen, and we have had 2 calls from out of our Dayton, Montgomery County area already, so that shows that streaming live does attract some viewers, and we hope even if you're not calling in, you're watching and enjoying the program with our expert guest, Mr. Chris Cowan, who's been on probably 15 years, and the advice is just as good as when he started, I guess. So, but we were talking about gift tax, and Mike. Oh, wait a minute, we do have a phone call. Let's go ahead and take it. Good evening. You're on You and the Law. Hello.
Hi, this is Mary from Eastlake.
Good evening, Mary. What is your question?
Hello?
Hello? We hear you.
Yes.
Can you hear us?
I was living abroad for a year or so, and I was teaching at a public university, and I was being paid monthly, kind of a stipend type thing, but I was not a student. I was an instructor. And so I was wondering how I should report that, or if I need to report that for my taxes here in the States.
And I take it Eastlake's here in Ohio?
Cleveland.
Well, there may be others. Okay, well, go ahead.
That's a really good question, and it's a little bit of an unusual.
It's in the north. It's near Cleveland.
Okay, thanks. We know now. Chris knows.
I know. I'm from Cleveland.
Okay.
The question that the question she's raised is, it was a little hard to hear, but she said she was living and working abroad,
Right.
and had earnings that was earned abroad. And the answer is yes, that income is going to be reported to the U.S. on a Form 1040. But there was a time in my life when I knew about this stuff, because I had a sister who lived in Saudi Arabia 15 years ago, and I was doing all her income tax work then, and there are exclusions for certain dollar amounts of earnings that are earned abroad, depending on how many days you've been abroad. And I'm actually having a little bit of a mental block on the number of days you need to be abroad to qualify for the exclusion. Let's say 180 days. If you live 180 days abroad and you earn certain dollars abroad, it is exempt. So there's an exemption. It used to be 70, now it's been increased. So it sounded to me like she had a dollar amount that was under, say, 70,000, and we didn't get a chance to ask her how many days.
Is that the exclusion amount?
It's been increased, but
Okay.
it's something north of that.
Right.
So the answer is yes. if you live enough days abroad, and you can substantiate that, and if the earnings are under the exemption amount, no problem, you have exempt income. Now, if she doesn't qualify for the number of days, or she goes above the exempt amount, there would be some taxable income
Now,
for her.
is it either or both?
Well, you have to qualify for the number of days
Okay.
to get the exclusion.
You got to be more than that.
You got to be more than a certain number of days, but if you get that, well, then you get the full exclusion.
Okay, suppose they're half of that.
They have no income tax then. In
Oh,
other
they
words,
have-
yeah,
they-
say they qualify for the number of days and they have $50,000 worth of income excluded.
Okay.
Yeah, so that's we have a couple good
That-
questions
that,
here.
That was a good question.
That's a good question.
Mary, thank you for your call. If you're not still on the line, we hope you're still watching. And
Whoever does her taxes, she should definitely say she was overseas, earned overseas, and make sure she at least checks to see whether or not she qualifies. Sure.
what is depending on where you are overseas, I guess, what is the likelihood that those things get reported back to the United States?
Well, it's if you're working with a U.S. company, good.
Uh-huh.
But if she's working for a foreign company, not so good, and that's where this
The honesty part
that's we're
comes in.
back to the honest taxpayer,
Just like the band. Huh?
just like the band and just like the cash and a lot of other transactions.
Okay, so, all right,
That's a good question.
yeah. Good thing you're here. I wouldn't have been able to answer that.
That's a little unusual. Overseas taxpayers earning money
And reporting it.
and reporting it.
Right. Okay, we got about 4.5 minutes left. Let me get back just for a second to that gift tax stuff.
Yes, yes. Yeah.
And if you go over, what are you supposed to do?
What are you supposed to do?
Yeah, what are you
The
supposed to
honest
do?
taxpayer?
The honest taxpayer.
If I give
and that's
you-
$14,000 for anybody you want to give it to.
You can give $14,000 to any person you want. So if I wanted to, I could give $14,000 to all my neighbors and everybody I go to church with.
Okay.
No problem. 14, 14, 14. But because I like you more, Mike, I give you 16,000. For you, I need to file a tax return. Not for any, I could give 100 people 14, no problem, per year. But if I give you 16, then I need to report that I made a gift to you of over 14,000, and we've used $2,000 of my lifetime annual exclusion, which now is $5,120,000.
Okay.
So my amount would go from 5,120 to 5,118, and my little ledger at the IRS would notch down.
Okay. And we're get back to the honesty
We're
thing
back
again.
to the honest again. Here.
How does anybody know? You give Aunt Lucy $20,000 because you just, you like her apple pie or whatever, and who's going to know?
Well, it's just like the taxpayer who gets $500 for doing legal services. We have
We have a professional duty.
We have a
It's
professional
in the
duty.
canons of ethics. We
And
gotta
the
do that.
tax system is based on voluntary compliance. The IRS doesn't come to my office or somebody's home and do an audit.
But the person getting the money has no tax obligation.
The person getting the money has no tax
Right.
obligation. It's the donor, the person who's making the gift. If he, say for example, I did go over $5 million with you, I would pay the gift tax on the amount of the gift that was taxable, not you as the giver.
So essentially, if you're doing it the way the IRS wants you to, you're eating up your lifetime
Exclusion
your
amount.
$5 million bucks, and
Right. Now
your threshold to be lower.
Obviously, for the vast majority of people, it's been no problem. But it was a bigger problem when the exemption was $750 or
Yeah.
$1 million, and we don't know where it's going to be 10 years from now.
Yeah. Okay. All right. We got about 2 minutes left, a little less than 2 minutes, and any advice you want to give us? About a minute's worth here.
One practical thing.
Okay.
So every year this happens.
Sign
somebody
your return.
file the return.
File the
because the biggest penalties are not for not paying.
Right.
The biggest penalties are for not filing.
Right.
So no matter what, even if you can't pay, no problem. File the return. It could save as much as 25% of the penalty. Sure, you're going to get interest for not paying, but is dramatically smaller than the failure to file. Failure to file is the most important. And number two, there's no criminal penalties for not paying. There are criminal penalties for not filing. So file the return is probably the best thing you can do, the best financial benefit you get for the least amount of work.
Okay, and sign the return and do your math.
Even if you can't pay, file. You can save thousands and thousands of dollars.
Or
in
get an
penalties.
extension.
Or extend, or just file and pay later. No problem.
Okay.
They'll take the money later.
Okay. I think we've run out of show here, as they say on ESPN. Hope we have as many viewers. We certainly thank the callers for calling in with excellent questions for certainly our expert, which we've been thankful to have, Mr. Chris Cowan, for 15 some odd years. And you have, as I said, been watching You and the Law. We want to thank all the volunteers behind the scenes who have made this program possible, as they do each and every month, and we're very grateful for them. We've been talking about taxes. We hope we've been helpful to you, the viewing public. I'm your producer and host. I'm Mike Monta. Thank you for joining us. Tune in next month and watch us on tape delay. Good night and good luck.